The Australian dollar is gaining friends with forecasts that the currency is heading back above 70 US cents. The boss of Home Affairs sacked yesterday over dealings with lobbyists, the first time that's happened to a federal department head, and get ready for higher insurance premiums. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Tuesday, the 28th of November, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Very big show today. Plenty going on at the moment.
Yeah, there certainly is. You've got a really good interview coming up after the show, Sean. You are speaking today with Anna Marinkovic, who is the Executive General Manager of Small Business at NAB.
Yes, so National Australia Bank is the biggest business bank, including the biggest small business bank. I like saying that. So we thought we'd get Anna on to ask her about some of the trials and tribulations of the sector, what's going well, what's not going so well. She's in a great position to tell us, obviously, because she runs that part of the small business part of NAB. So it's a great chat all about the SME sector.
Yeah, and I found it really interesting when you talked to her about whether people are still starting businesses now, and if they are starting businesses now, kind of what you should be kind of considering and how you kind of set yourself up for success. And as you say, Anna is best placed to know all about that because of the amount of data that they have at NAB about all of this. So really interesting conversation that's coming up later on. The main story this morning, Sean, the Aussie dollar is gaining friends slowly, with experts tipping the local currency could continue its recent run, whereby it's now trading at 6-month highs and head towards 70 US cents in coming months.
Now, the Aussie dollar is very important, and not just for holiday makers, people like you heading off to Fiji or wherever. It actually sets the price that overseas buyers use to purchase Aussie products. So think commodities like iron ore, but also services like education. It also determines how much our imports cost. So if I'm buying a new fridge or a TV, how much that's going to cost. A weaker currency is good for economic growth because we sell more stuff offshore and consumers tend to buy less stuff from overseas, substituting locally made goods. For investors, the currency matters, particularly if you're putting money into overseas assets. The currency was at 80 US cents in February 2021, then fell to less than 63 US cents about a month ago. It's up about 5% since then to be trading just under 66 US cents. AMP Shane Oliver reckons there's 5 reasons to expect the currency to rise. First one, it's low on a historical perspective. Long term, it's normally about 72 US cents. Another reason, in the short term, interest rate differentials between countries matter. We think that the US Fed has stopped lifting rates. We're not sure about the local Reserve Bank. Put those two together, that will help the Aussie dollar. Third reason, commodities look to have entered a new super cycle, according to Oliver. That will definitely help the local currency. Number 4, according to Shane Oliver, we have a solid current account surplus. And number 5, sentiment towards the currency is yet to turn. People aren't that interested in the Aussie dollar, but that will change.
Can I ask you what is possibly a silly question here, Sean?
You can ask me, but if I don't have the answer,
then who looks worse than the person who asked
right.
the silly question or the one who couldn't answer it?
Yeah.
What do you mean by a super cycle when you refer to commodities entering a super cycle? What exactly does that mean? Because it sounds very cool.
It is very cool. Basically, it's that demand for commodity picks up for a long period of time. So it's, the commodity demand is very cyclical, up and down, depending on the economies of the world, particularly in our sake, particularly China, Japan, the US probably to a lesser extent when it comes to commodities. If you think of all the talk we're having about lithium and rare earths and all that sort of stuff, there's a real strong chance that becomes a super cycle, as in a long-term up cycle for commodities. So that's what we're talking about.
Oh, okay. So that all makes perfect sense. And just by adding the word super, it automatically becomes more exciting because you've got superheroes, you've got a super moon, a supernova, which is infinitely better than a regular nova. Super Ted, remember him?
No, what's Super Ted?
Super Ted was one of the greatest animated shows. I reckon it would be late 80s, very early 90s, probably not quite when you would have been watching animated. But Super Ted, go and look it up on YouTube. It's just it's a great kids show. Anyway, a little bit of nostalgia there for you.
when you were talking about that, I thought I was only talking about the upside of the super cycle. Super cycles also have downsides as well. I mean, when you're talking about super TED, I'm thinking that's good, but super cycles actually they have higher highs and lower lows. So it's sort of just, I just want to clarify that.
So the whole lot is more extreme.
That's right. It's super.
Well, okay. Well, it feels like we're kind of dipping in and out of kind of serious content here, Sean. So I'm going to take it upon myself to just get us back on track. The Aussie dollar, how much, if you were to kind of look ahead, how much will it appreciate against the greenback?
Well, as I mentioned, 72 US cents is about the long-term average. Oliver forecasts it could shift beyond 70 US cents next year. Several of the major bank economists agree on that. The main risk in all of this is if economies slip into recession. Now, in tough times, people want to hold the US dollar, and that will work against the Aussie. All the talk recently is that the US might actually avoid going into recession. We've been forecasting a recession in the US for about 6 months now. Hasn't happened, and it may not happen. Beyond the US dollar, we should think about that too. On a trade-weighted index, which measures the Aussie dollar against our trading partners, the local unit has picked up a bit. What does all this mean? Well, if you're an investor or an importer or an exporter for that matter, a significant shift in the Australian dollar can make a really big difference to your business on the plus or minus side. A stronger dollar actually works to slow the economy, which actually might be a good thing in terms of interest rates, at least at the margins. So, well worth keeping an eye on what the Aussie does over the next 6 to 12 months.
That's a great story. And I learnt a lot from you, Sean.
When you say that, I'm never quite sure. You never say it without a grin. Look at you. You're sort of half grinning. I'm just not sure what's going on.
No, I'm being genuine. I'm sorry if there's just like this, there's just this natural element of sarcasm to my voice. I can't help that. I did learn from you just then.
So, listeners, what you don't know is when Michael's talking, he sometimes raises his eyebrows when he's trying to make a serious point. And I'm not sure whether that's about him. Don't look at me like that. Just don't look at me like that. I don't know whether he's sort of, that's condescending, whether it's just him thinking. I think it's when he's thinking, he lifts his eyebrows.
It's my thinking face. You've nailed it. How did local markets perform yesterday, Sean?
The S&P ASX 200 closed down nearly 1%, finishing at just under 7,000 points. Of the 11 sub-indices, only the tech index rose, while the real estate, consumer discretionary and materials indices all fell sharply. Rough day for the big miners. Fortescue Metals dropped 2%. BHP and Rio were both down about 1.5% or a bit less. The major banks, with the exception of National Australia Bank, all fell sharply. Commonwealth Bank, Westpac and ANZ were all off more than 1%. Aristocrat Leisure was another poor performer. Perhaps one of the worst, certainly one of the worst of the major players. It was down 2.7%. WiseTech Global ended up more than 1.5%. That was about the best of the large caps, bar QBE, which I'll tell you about in a moment. Lithium and nickel miner IGO fell after the company stood by its decision to appoint Ivan Vella as chief executive officer. Now, Vella, he was sacked by Rio Tinto a fortnight ago. IGO said they'd investigated the circumstances. They're still confident that Vella can come on as CEO. Former Business Council Chief Executive Jennifer Westacott has been appointed chairwoman of the $460 million ASX-listed philanthropic vehicle Future Generation Global. If you haven't heard our interview with Caroline Gurney of a few weeks ago, she is the CEO of Future Generation Global. Go back and listen to it. It is a great philanthropic fund. And finally, the share price of online cosmetics and makeup retailer Adore Beauty jumped by as much as 25% after its board said it had knocked back a takeover bid of up to $1.30 a share. By the end of the day, it was up 19% to about $1.12.
Yeah, there is plenty happening. What about international markets?
It's been quite a ride for the iron ore miners. I just mentioned that the share prices had fallen. That's on the back of the price of the commodity falling. It ended its longest streak of weekly gains since the beginning of the year. The Chinese National Development and Reform Commission, a company that we love talking about here on Fear and Greed, the Chinese National Development and Reform Commission, over the weekend it said it had met with major port operators to discuss iron ore inventory and storage matters. Read between the lines on that one. Chinese authorities basically want to put a lid on rising iron ore prices. They're up about 30% since mid-August, and I think the market read between the lines, and that's what happened. In other markets, Brent crude is down a touch, while gold is back above $2,000 an ounce.
All right, we'll be back in a moment with the rest of the day's business news. Sean, the Home Affairs Secretary, Michael Pizzullo, has been sacked from his role over dealings with lobbyists and alleged efforts to exert political influence during the Turnbull and Morrison governments.
It's the first time a federal department head has been dismissed for misconduct. An independent inquiry determined Pizzullo had breached the Australian Public Service Code of Conduct at least 14 times. While the full inquiry is not public, we do know a little bit about it. There are 5 main allegations: that Pizzullo used his duty, power, status or authority to seek to gain a benefit or advantage for himself, that he engaged in gossip and disrespectful critique of ministers and public servants. Oh, I hope we don't have that one on Fear and Greed. That's a tricky one. Anyway, the third one, that he failed to maintain confidentiality of sensitive government information. Number 4, failed to act apolitically in his employment. And number 5, failed to disclose a conflict of interest. Now, Pizzullo worked for both Coalition and Labor governments over his period. He's been very successful, highly regarded, or he has been highly regarded. He became Secretary of the Immigration Department during the Abbott government. In December 2017, he was appointed to head up the Department of Home Affairs, where he reported into Peter Dutton. Pizzullo will not receive a payout from his more than $900,000 a year job because on Friday, as in 3 days ago, the Remuneration Tribunal changed the rules. So the fact that he has been sacked means he gets nothing.
Sean, the latest news poll from The Australian shows Labor's primary vote falling sharply in recent weeks, and on a two-party preferred basis, the government and opposition are now neck and neck.
The poll shows Labor's primary vote falling to 31%, below its election result of 32.6%. As Parliament sits for the final time this year, the Coalition's primary vote has lifted a point to 38%, its highest level since the election. The 50-50 reading on a two-party preferred basis is a 4-point turnaround over the past 4 weeks. Now, the Greens continue to poll well, while the Teal independents remain well liked. It comes against a backdrop of 13 interest rate hikes since last May, a cost of living crisis in some parts of the economy, the failed voice referendums in there, the High Court decision to overturn indefinite immigration. Mind you, in terms of preferred leader, Prime Minister Anthony Albanese still leads opposition leader Peter Dutton.
And Federal Treasurer Jim Chalmers has appointed British central banker Andrew Houser to be the Deputy Governor of the Reserve Bank of Australia.
Doogie will be number 2 to new Governor Michelle Bullock. Sorry, I couldn't help myself.
I was there showing my age with a Super Ted reference, yes. And then you just blew me out of the water with something from even further back. Doogie Howser.
Doogie Howser. Anyway, Andrew Houser, Mr. Houser, will be number 2 to new Governor Michelle Bullock, and both are expected to guide the central bank through a raft of changes to be introduced to Parliament this week. That includes the creation of specialist boards for interest rate setting and governance and refining the bank's inflation and employment mandate. Now, Mr. Houser has worked at the Bank of England for 30 years, most recently overseeing the central bank's balance sheet, the UK's foreign exchange reserves, and providing advice on macroeconomics and markets. Good luck to him.
Sean, some of Australia's biggest super funds have agreed to invest nearly $30 billion in the United Kingdom for large-scale infrastructure and renewable energy over the next 4 years.
Yeah, big deal. The industry super funds have an investment arm, IFM Investors, and IFM has pledged nearly $20 billion or £10 billion at the UK's Global Investment Summit. Now, in addition, Aware Super, another of the country's big superannuation funds, pledged $5 billion of investment. That's about 10 billion Aussie, in Britain's energy transition, affordable housing, life sciences, innovation, technology, and digital infrastructure. The big Aussie super funds need to diversify their growing pots of money. When we're putting so much money into super, they need to put it somewhere. The British and European economies are starting to look attractive to them. They've slowed recently. In fact, the UK may well be in recession. The funds have obviously identified opportunities in the region. IFM is already in Britain. It has a portfolio of assets, including stakes in 3 airports, a toll road, a water utility, and a telecommunications provider. Now they want to put more money, presumably confident that the returns will be well worth it.
Now, this story, Sean, got a lot of headlines a little while ago when it first hit the news. Hamilton Island, one of the best-known tourist spots in the country, is no longer for sale, with the Oatley family deciding to keep it.
The island was, according to media reports, worth around, or at least it is, worth around $1 billion. And the family inherited it in 2016 alongside other businesses from Bob Oatley. He was a winemaker and sailor, extremely well known. The family had asked investment bank UBS to undertake a strategic review about what to do with the island. Now, it's about 740 hectares, Hamilton Island, can accommodate up to 5,000 people. It was developed back in the 1980s, sold to Bob Oatley for about $200 million 20 years ago. Bob Oatley himself made his money selling Rosemount Estate to South Corp for about $1.5 billion. So he had plenty of money, bought the island. It's kind of been one of those things that doesn't ever seem to have made a lot of money. At least that's what media reports are saying. Now, the rumours are that the Oatley family couldn't actually find a buyer to pay the $1 billion asking price, so they've decided to keep it.
Okay. Sean, there's pressure on the insurance companies, and unfortunately, we should not be surprised if the cost of insuring the car or the house jumps even further.
Alas, yesterday the country's biggest insurer, QBE, said inflation is continuing to have an impact on car and home cover. Last month, rival IAG said the same thing. QBE said inflation in Australia, along with tough crop conditions for its North American operations, will cause some strain on the business this year. The good news for shareholders, however, is the relatively benign trend in natural disasters over the past 6 months or so. Gross written premiums, basically that's a measure of changes in volumes and values of insurance contracts. So gross written premiums are set to rise 10% for the year. That's quite a jump. That's where the higher insurance premiums fit in. In the Australia Pacific region, it's worse. Premium rates have accelerated 12.5% in the last quarter. So when you are getting a car insurance renewal, or a home and contents insurance renewal from QBE, expect a shock. Retention rates of customers have remained relatively stable at 86%. That suggests people are prepared to pay that extra cost. In a down market, QBE's share price jumped more than 2% yesterday.
One more for you, Sean. This is an interesting one. The chair of pathology group Helios will step down after failing to win the support of large shareholders ahead of today's annual general meeting, where she had hoped to be re-elected.
Jenny McDonald has had the job for a little over a year and had run into trouble with large shareholders. Some had decided to not vote for her today. As a result, the resolution on her re-election has been withdrawn. She has said that she won't stand. Largest shareholder, Tenora Capital, has been angry about shareholder value, or basically the destruction in shareholder value. The share price has about halved over the past 3 months. There's also a heavily discounted rights issue last week. Ahead of yesterday's announcement, Helios' share price had fallen to a 24-year low. Yesterday, it jumped about 4%.
Okay, turning to international news now. Israel and Hamas have indicated that the temporary ceasefire in Gaza could be extended beyond last night to allow for the release of more hostages and prisoners.
US President Joe Biden backed the pause, saying it's allowing for the delivery of critically needed aid to Gaza and the recovery of hostages. One of the hostages released over the weekend was a 4-year-old girl, a US-Israeli dual national whose parents were killed by Hamas militants in their October 7 attack on Israel. A 4-day pause brokered by Qatar, which began on Friday, provides for Hamas to release 50 hostages in exchange for 150 Israeli-held prisoners, and for Israel to hold its fire for each day that Hamas frees 10 more captives. Fingers crossed on that one.
Indeed. Now, China's Health Commission says a combination of pathogens is causing a surge in acute respiratory infections across the country, reiterating previous comments aimed at easing concerns that a novel virus may be the source.
Yes. Post-COVID, these stories get a lot more headlines than they ever did previously. According to the National Health Commission in China, influenza is one of the main causes of the spike in cases. A number of other viruses are also circulating. Outbreaks of respiratory diseases have been hitting children particularly hard, according to a report on Bloomberg. The Chinese Center for Disease Control and Prevention and Beijing Children's Hospital told the World Health Organization last week that there have been an increase in outpatient visits and hospitalizations. But importantly, so far the sources of the illnesses are all well-known germs.
Sean, I have no idea what this last story has to do with business news, but
it's just a good story.
It's just a good story.
Well, no, there is a business angle, how to make money doing a music video.
Okay, all right, well, let's get into it then. A Catholic priest has been stripped of his administrative duties after allowing a pop star to jump around his church for a somewhat provocative music video.
Sabrina Carpenter is the woman. Google it. It is quite funny, really. So Monsignor Jamie Gigantiello has been demoted after opening the doors of his New York church to be used as a set for the Sabrina Carpenter music video, according to the Daily Telegraph of London. Dressed in, well, not what I would wear to Mass, and most of the people that I went to Mass many years ago, they weren't wearing the top and tights that Sabrina Carpenter was wearing. She uses the altar of Our Lady of Mount Carmel Annunciation Parish in Williamsburg, Brooklyn, as her stage as she parades around upright pastel-coloured coffins, one of which reads, "Rest in peace." The next word starts with a B. One of my most hated words of the lot. The American singer struts around the church, apparently mourning a number of her would-be suitors whom she watched die. One of those was led to his death by she pulled his tie in a lift and he got caught, and that's the end of him. Anyway, the Diocese of Brooklyn said it was appalled by the performance at the 19th century church. According to the New York Times, however, the video has now been viewed more than 9.7 million times.
Is this about modernising the church? Yeah,
maybe. It's certainly, it's a beautiful church in the video, but what was going on in that video didn't happen in my time going to Mass.
I'm still not sure if you made the link very clear between business news and this video. It feels like you just added it in there just for a little bit of scandal.
I don't know Sabrina Carpenter from a bar of soap, and I've now listened to the song she's put out a couple of times, and, well, she ain't no Tay-Tay, that's all I'd say. However, I have been watching her video, so she's probably making money off me somehow.
Okay, well, you know what? I think we'll just leave it there and just guarantee, we can almost guarantee that there will be a little spike. You know, just some curious Fear and Greed listeners who are Googling Sabrina Carpenter right now. Thanks to you, Sean.
I bet you do.
Maybe I will. Up next is the Fear and Greed Daily interview with Anna Marinkovic, Executive General Manager of Small Business at NAB.
Yes, all about how the small business sector is going, and we have a chat if you want to jump in and start up a business, what you need to think about.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you very much, Michael.
It's been quite the ride. It's Tuesday, the 28th of November, 2023. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.